Welcome to The Interest. I'm Katie Jensen. Today, we have our legendary Bill Bodnar ready to debrief last week's market activity on Master the Markets. Up next, we'll see our own Andrew Berman and Vincent Valvo go toe-to-toe in another segment of Cage Match. But first, let's check out the latest episode of Gated Communities, where industry leader Patty Arvielo, CEO and co-founder of New American Funding, came on to discuss NAF's latest white paper on empowering diverse communities. She also brought along her Senior Vice President of Strategic Growth, Mosi Gatling, who shares insights on marketing to diverse communities. Stay tuned to hear more.
As a Latina, the fabric of this company is who I am. So when everybody talks about DEI and I cringe, or, the whole in the box type wording that we're explained by, when you are of a different ethnic background, you don't feel different. You just are who we are.
Some may find it strange that Patty Arvielo, the only woman in the industry leading a major nationwide retail lending company and proud Latina, would cringe at the term DEI. Well, as much as Arvielo appreciates the industry's increased focus on DEI and combating redlining over the years, the amount of DEI pandering she and others have seen from companies has truly tainted the message. And that's partially what NAF addressed in their new white paper, Empowering Homeownership in Diverse Communities.
When I first met Mo, I'm like, Mo, we need to do a white paper. We need to talk authentically about what we're doing in a very positive way. We're so tired of hearing underserved. I think it's unmarketed. You don't have a marketing plan that speaks to the communities in which Latinos and Black Americans live.
NAF's Senior Vice President of Strategic Growth and Expansion, Mosi Gatling, knew exactly what Arvielo was referring to. NAF's white paper advocates for a more ethnically diverse industry so companies can authentically market and communicate with various groups of borrowers.
So, as a Latina woman, as a Black woman, we are able to literally map out things that meet them where they're at. And they're authentic, which is a whole different way of marketing to people, to talking to people, to really being able to serve them. Whereas when we talk about other companies, the leadership looks different, right? They're going off of reports and HMDA data.
Arvielo and Gatling believe that having a diverse workforce will enable a trusting relationship to form between the mortgage industry and certain communities not being marketed to. When a white loan officer challenged that theory to Gatling, she demonstrated how someone of a different background and culture would struggle to understand and build trust with their underserved borrowers.
I asked him if he had ever heard a Black woman tell him that upon doing an application, that they would go forward if the Lord saw fit. And the originator happened to be white, a white male. And he told me, yeah, I've heard that a million times. I said, do you know what that means? He said, no. And I'm like, it means that the person mentally checked out on you.
Gatling explained how it's likely that women or people in her community faced many obstacles in getting a home. Perhaps no one she knows has succeeded. More importantly, the borrower is saying the fate of the transaction is in the Lord's hands, not the loan officer's hands. Gatling is able to recognize that the borrower is untrusting of the loan officer because she shares the same culture and understands her phrasing.
I've taught my team that, people that would have otherwise not known because they didn't have that lived experience. So exactly what Patty said, for reasons of being able to connect, that's a real life example we can use.
To learn more about the differences in authenticity versus pandering, check out the latest Gated Communities podcast on nationalmortgageprofessional.com. For The Interest, I'm Katie Jensen.
We all dream of owning a home, but for too long, if you didn't fit the mold, you were stuck. Stuck because the system worked for everyone except you. We've changed that. Angel AI uses advanced AI technology to give a 100% trusted solution and fast answers for worry-free financing, allowing you to achieve fair and equal access to lending. Angel AI, AI you can bank on.
Hey everyone, thanks for tuning into our Master the Market segment. So this is a big week. This is the week the Fed tells us that core PCE, their favored gauge of inflation, which they want to get to 2% or at least move sustainably towards 2%, is going to bottom in 2024, right? It's probably going to come in 2.6% for the year, but the Fed is saying that's going to be the bottom and it's going to get higher from there. And that's why they're saying we are only going to cut rates once this year. So obviously it's a big number. If it comes in lower than expectations by a tenth, that could spark a really forceful reaction that could be bond friendly, and the opposite is true. But before we get there, there'll be a bunch of auctions that we have to navigate, and that's been also a problem for the bond market. So watch it carefully. And what we're watching over here at Mortgage Market Guide is 420 on the 10-year note. Getting through that would be a nice milestone. We'll be on our way towards 409 and 4%. Have a great week, and we'll talk to you soon.
Okay, so Vince, if you're an originator today, actively pursuing business,
I hope you're actively pursuing business.
Yeah, that's true. This is true. Is it a good strategy to focus on real estate agents?
Boy, yeah, listen, historically, of course, it's been. Unless, we were in those couple of years where all you had to do was refi everybody. You didn't need real estate agents to have business. Listen, it can't be a bad strategy to go after real estate.
So for you, if you were out there, if you had your NMLS, you're trying to write some loans this month, are you going to focus your efforts long term, on building business with real estate agents?
I think there's an awful lot of LOs out there that have proven that is a good long-term strategy.
Sure.
And so I would try to do that. Is that going to be the be-all and end-all of my strategy? It's not going to be. It's not going to be, because it's just so much harder to get that real estate business right now. And there's just so little activity that it's very difficult. And so many real estate agents already have, preferred relationships with people. It's not that you can't break through it. That's what I'm saying. You do it. But if that's all you're doing and you're just starting out, it's going to be a lot harder for you. And that's different than if you've been doing it for a while. You're sticking with that strategy because you've got your relationships in place.
So I think to me, I mean, and I know this is the, you talk to originators. This is a big area of focus. I think actually, as an originator today, you should be focusing on consumer direct. So doing what you could do to now listen, not I don't want to say cut out the real estate agent, but where you're acting as the person who's driving the transaction and bring the business to the real estate agent. I mean, if you think about the average mortgage professional that's closing enough loans to be able to support their family and put food on the table, they're seeing more transactions than the average real estate agent that's doing the same thing. So by nature, they are more experts at real estate transactions than the actual real estate agent in many cases.
Yeah, I don't disagree with you there. I think the problem really has to be, are we living in an idyllic world, or are we living in a practical world? In an idyllic world, you are absolutely correct, right? But in a practical world, the problem is that there's an awful lot of loan originators out there that have never gotten the right kind of training, that have never figured out the right approach to this stuff, who, when you talk consumer direct, don't have any idea what you're talking about there.
Yeah.
And we know this because we've seen so many times where all the surveys come back for people who, they have a nice closing on their loan, and then they want to refinance, and they're refinancing within a year, and they can't remember who the loan originator was because the loan originator never kept up any marketing to them. They didn't remarket back. They don't know what that is. Until they learn consumer direct, the easiest thing for them to do to build business is to try to make friends with real estate agents. Now, again, it's a slog, but you gotta do it. Then you gotta learn how to go build that business yourself. And the real problem isn't should they be doing that? It's, are they getting trained for that?
Yeah,
and I'm not sure that they are. I don't know what you think.
So I definitely agree, because I think in the originator that's going after real estate agents, what they're being reactive. I mean, generally speaking, they're reacting to the buyer coming to them from the real estate agent, and they're just kind of playing defense and doing what they can do to make the real estate agent the hero in the transaction.
Right. They should be the hero in the transaction.
Yeah,
That's the
and,
thing.
and bringing that business to the real estate agent, saying, "Hey, listen, I got this person qualified.
Right.
You know, they could buy a $450,000 house. This is what you're going to show them."
Yeah. And then they'll get that business from that realtor in the future because they brought them that business. So
Yeah.
I think this was probably more of a tie for us. I think we're both right on both sides here. It's a strange time, but there are opportunities for LOs to grow their business, both with realtors and doing consumer direct, and to become more of a hero as we go forward.
Okay, fantastic. And since you have a fancy handkerchief, I'll let you win this one. You'll take this win today.
Yay!
For more on these and all of today's top stories, go to nationalmortgageprofessional.com.